Nvidia is reportedly about to guarantee $250 billion of somebody else's rent. Not its own debt, somebody else's. And when that news landed today, the market read it as confidence. The strongest balance sheet in technology stepping in to de-risk the biggest construction project in the history of computing. Here's the thing almost nobody spent time on. There is a line inside that deal that tells you exactly what Nvidia is willing to stand behind and exactly what it is not. And once you see where that line is drawn, you cannot unsee it. Start with what is actually being built, because the scale is doing a lot of work in this story. Southern Ohio, a place called Piketon, a decommissioned uranium enrichment site about 50 miles south of Columbus. SoftBank's energy arm is developing it. When it is finished, it is meant to support 10 gigawatts of computing capacity. That is roughly the output of 10 large nuclear reactors pointed at one campus to run artificial intelligence models. Total cost, including the chips, could pass $500 billion. That would make it the largest data center project ever announced, by a distance. And OpenAI is the tenant. Now here is the part that matters. That $250 billion guarantee covers the leases and the construction financing. The buildings, the power, the commitment to pay for the space. The chips are explicitly outside its scope. And in a completely separate negotiation, reportedly, Nvidia is also in talks to help fund up to $350 billion of chip purchases. Same buyer, same campus, same week. Two structures, and only one of them gets the guarantee. Which one? The one Nvidia does not manufacture. If you have never seen one of these structures before, here is the short version, because the whole story lives in this mechanic. A backstop is a promise. Nvidia would be telling the lenders and the landlords, if this tenant stops paying, we pay. That promise is worth real money because it converts a risky loan into a safe one. The lenders no longer have to believe in OpenAI's business model. They only have to believe in Nvidia's balance sheet. And they do. So the money gets cheaper, the project gets financed, and the buildings go up. That is genuinely how a great deal of infrastructure gets built. It is not exotic, and on its own, it is not sinister. But ask the obvious follow-up question. Why does the most famous company in artificial intelligence need somebody to co-sign for it? The reported answer is the flattest sentence in this entire story. OpenAI has not turned a profit, and therefore cannot obtain an investment-grade credit rating on its own. That is it. That is the reason. The company that reset the entire technology industry, the one everybody agrees sits at the center of the most important platform shift in 20 years, cannot borrow at investment grade against its own name. So somebody has to lend it theirs. And that somebody is its largest supplier. So put the two numbers side by side. $250 billion, wrapped. $350 billion of chips, not wrapped, negotiated separately. If you were completely convinced this campus would earn enough to cover its own costs, the cheapest thing in the world would be to guarantee the whole stack. One structure, one set of terms. You would be underwriting your own confidence, and you would get better pricing for doing it. Instead, the guarantee stops precisely at the edge of Nvidia's own product. That is a decision somebody made in a room, on purpose. And it is the single most informative detail in this deal. Now, I want to be fair to the other side because this genuinely splits serious people. The constructive read, and this is Bloomberg Intelligence's read, is that Nvidia gives everyone confidence. Banks will lend against Nvidia's name. It gets projects moving. Capacity gets built years earlier than it otherwise would. That is an entirely reasonable interpretation, and it may be exactly right. The other read, published the very same day, is blunter. You need a $250 billion guarantee precisely when the debt markets have already said no. Both of those readings explain the same fact. They cannot both be correct. And here is what makes this week different from every other week this argument has been had. It stops being theoretical on Wednesday. Nvidia's stated position is that it does not contractually require anyone to spend its financing on Nvidia equipment, and there is no public evidence against that. Fine. But the underlying question, whether the money coming out of these campuses justifies the money going in, gets tested in the next 48 hours. Microsoft and Meta report Wednesday. Apple and Amazon report Thursday. And they are walking up to a bar that Alphabet just failed when it fell after reporting genuinely strong cloud revenue. Read that again. Strong numbers, stock down. The market has stopped paying for artificial intelligence revenue growth and started asking for a return on artificial intelligence spending. That is a regime change, and it happened quietly. So let us be precise about what this is and is not. This is not fraud. It is not hidden. It was reported, it is being negotiated in the open, and the talks are early enough that the entire thing could change or fall apart. Nobody should be trading a rumor. But structures carry information whether or not anyone intends them to. And this structure says one thing clearly. The company with the best information in the industry about what these campuses will actually earn was willing to stand behind the real estate, and chose, at least so far, to keep its own chips on the other side of the line. So that is the read. The story is not that Nvidia is lending. Vendor financing is old. It is normal, and sometimes it is genuinely how the future gets funded early. The story is where the guarantee stops. And the honest position is that nobody watching from outside knows yet which reading is right. What we do know is what to watch. Watch whether any final agreement pulls the chips inside the guarantee, because that would be Nvidia underwriting its own demand. And watch this week's capital spending numbers against the revenue that is supposed to justify them. If the returns show up, the backstop was foresight. If they do not, the backstop was the first honest signal anybody sent. So what do you think it is? Confidence or a co-signer of last resort? Tell me in the comments. This is research and educational content only, not personalized investment advice. I'm Frankie. The asymmetric signal, one contrarian read a day. Subscribe.